and welcome to the Gen Z panel. So, at a time when the mutual fund industry is nearing or powering towards the 100 trillion milestone, with 70 trillion in assets as of now, the role of Gen Z population is something that we cannot ignore. Now, this generation is very much interested in spending, but as we have seen with the new investors that have come into the market fold, they are heavily into investing as well. But it looks like many of these young investors that came after the COVID-19 pandemic, they took high-risk bets in crypto, FNO, direct stocks with not much guidance. So in this panel, we'll discuss in an era where there are n number of options and there is fleeting attention, then how come as an ecosystem, we with mutual funds, advisors, distributors, and wealth tech platforms, how can we build better relationships or better investor decisions? Vishal, if we can start with you, like Gen Z population age is generally 13 to 28 years. And in 5 years or so, this population is going to drive mutual fund growth. Now, when they are tech savvy and they can switch buy, sell at the click of a button, is it good or bad for a mutual fund which requires a lot of patient investing?
Yeah, can you hear me? Yeah. So good question, Abhinav. I mean, keeping in mind that, look, at the end of the day, humans are humans. I think we've all been through ups and downs in life. I mean, I remember when I started off my career, at that point of time, derivatives have just started, way back in 2000, 2001. We all dabbled in the market. We all took punts in the market at that point of time. A lot of them went right. Most of them went wrong. And you learn and grow in that sense. And obviously the ones that go wrong, you automatically become a long-term investor, yeah, right? And that's how you keep growing and learning. And I think that if you look at the current, age group, I think they're highly informed. They learn fast. They have a lot of information in their hands. And I think that, the cycle that we went through maybe 2 decades ago, they'll go through it faster in that sense. I would just like to say that, from a perspective of mutual fund investing, I think, as even all the other panelists in the previous panels alluded, we keep talking about the fact that, one should look at an asset allocation. That means keep investing across assets, whether it's equity, commodities, and debt, and even within equities, look at various segments of the equity market. Keep investing regularly. Stay the course. I mean, a lot of times you find that if markets fall, people stop their SIPs. Keep doing your SIPs at regular intervals. And as I said, to reduce risk, ensure that you have a good asset allocation with you.
Right. Now, Sandeep, these young Gen Z investors prefer apps or wealth tech platforms, direct investing. So do you think by directly investing into the market, they are making empowered choices, or are they letting go of personalized advice?
No, I think, first of all, the Gen Z, you spoke about recency effect and how in the last few years returns have been good. So therefore, how are these guys reacting? And I actually feel that the reason recency bias is a term is because it cuts across generations, right? It has been there for a reason. Most of the Gen Z are actually significantly empowered and aware, right? One of the things that we find in our engagements, and we deal with them on video calls, so we actually learn a lot more about how they behave, is that consistently they know enough and more about investing. In fact, there are times when, we have to up our game to be able to keep them engaged and educated, right? So they actually know really well. What our job is constantly to bring back discipline. And in doing that, how do we communicate is actually very important. So even for digital platforms like us, the mechanism, the storytelling that we bring is really, really important. Like, recently there was this question on how, or should I follow a FIRE goal, or should I create a certain corpus and then retire? One of the clients I was speaking to, he told me an interesting phase, and he's a 30-year-old who made some money off ESOP buyback. He said, Sandeep, we have to be really careful when all my friends are talking about FIRE, because I tell them that FIRE is fueled by irrational return expectations. So he gave a new definition to FIRE. Now that coming from somebody who is a 30-year-old, who's read up about the markets, who has ChatGPT at fingertips, I think is fascinating. So I think the real responsibility for all of us is to up our game and be able to communicate in the way that they understand.
Right. You mentioned FIRE. I mean, maybe to achieve FIRE, many young investors might have gravitated towards riskier assets. Now, Ashish, you are founder of two companies. One is a CoinSwitch crypto exchange, another is Lemon, which is more into traditional assets. And we have seen a lot of young investors came into crypto after 2020. So with the recent crash, did you see any change in their investor behavior, maybe gravitating towards more conventional assets classes?
Let me take a step back first and say thank you. This is the first panel in last 5 years where somebody has actually said crypto on stage. And I've been in a lot of fintech panels. People call it alternate asset rather than crypto. So thank you for doing that. And acknowledging, that crypto has been a newer asset class, riskier albeit. But investors, the Gen Z investors, because 70% of our users are Gen Zs, right? And how we have learned to cater to them, because crypto fluctuates a lot, being a new asset class. There's a lot of fluctuation in the market. I think trying to help them learn better, trying to figure out whether, the fluctuations are something that is part of the game itself, or should they start allocating some part outside and look at this as a riskier bet, which could either pay off handsomely or which could, go to zero and still not hurt their portfolio, right? I think a lot of Gen Zs have started to understand that. In the recent times, we have seen some of them doubling down on crypto because they feel like, oh, this is the asset class they want to be in. Some of them start to realize that, crypto, I will only allocate 5 to 6% of it, and rest I will go to stock market, mutual fund, and do more passive, so that I have a sustained portfolio over the period of time. And that is the reason that we have Lemon as well, because a lot of our users wanted, alongside crypto, how can we do traditional investment better, simplified, and that is the reason, we have both the products out there.
Right. So, I mean, so do you have a sense of extra responsibility towards investors? Because, I mean, crypto is still unregulated, and we have seen some hacks happening, unfortunate events happening in the industry. So what extra do you do to reach out the message to these young investors?
I think I think I'll answer it in two parts. First is, how do you build trust in a digital ecosystem in a sector which is unregulated? And second, how do you mitigate or, instances like hack, fraud, which are happening in this industry without a regulator? So I'll answer the second part first, which is, when a regulator is there, our job becomes slightly easier because there are guidelines that you can follow. And ultimately, within the spirit of those regulations, you try to build your product, reach out to users, and try to sell your product. In crypto, the regulations do not exist. There is no clear regulator itself that exists. So we have to do a lot of self-regulation. But with self-regulation, the problem is that, business will always push to get more business, and, you'll try to take shortcuts. What we have learned over the 8 years that we've been operating CoinSwitch, the only way to build a sustainable crypto platform is to think of long-term. What the MFI chairman was talking about as well is that it is not a short-term game. Ultimately, you have to look towards long-term, and so sometimes you compromise your business as well. We have taken calls where we have not listed tokens which we feel are risky. We have taken guidance from mutual funds and invented our own riskometer for crypto, so that we actually advise platform. We are the only platform in the world which advises to not to invest in certain tokens because they are highly risky, right? So I think taking that helps us do better. And answering the first part is about brand. are digital first, branding plays a key role. How do you communicate trust? So the founders have to be out there because Gen Zs are, are social animals, right? They're looking for people who are like them, building platforms like them. So as founders, we need to be out there communicating our vision to them, helping them understand crypto in a bite size, maybe, TikToks and creating more Instagram reels rather than creating long form articles, right? So building trust through brand is equally important.
Right, right. Now, Dilshad, talking about the long-term investing, you are the lone voice of advisor on this panel. So, I mean, traditionally, the sense is that long-term investing starts at 5 years and goes further. But with the younger generation, I feel like sometimes the investment horizon is like 1 year or maybe less. So, what is your experience like with the Gen Z investor while advising them, and how challenging is it for you to advise someone with the mindset that the 1 year is the horizon?
So I'll take off from where, and thanks for having me on the panel. So I'll take off from where Sandeep started, actually. I think the Gen Z is very, very well informed. They know what they want, but they don't know how to get it. And for example, if they were to come and research RIAs, they have already checked my background. They've already checked who, how many years of experience, what I do, etc. And they say, okay, this is what we want. They just want it to be validated. Is it the right thing? Is it the right way about going about this? Should we make changes? So I think that kind of validation is what they're looking at. Now, coming to their requirement of short-term, long-term, FIRE, retirement, etc., I think for us, it's a journey of taking them through the education and the financial literacy of where they are today and where they want to go. We start with what exactly are they looking at, what are their goals, what are their objectives, So, I mean, ours is quite a traditional kind of setup where, we do one-to-one, we do a lot of counseling, we do a lot of financial education, and then we move into the actual of, why of investing. And I think that has helped people kind of tone down their aggressiveness. We also talk
aggressiveness
about
in terms of return expectations?
Return and also quick money. So when I spoke to my kids, I think the first thing they said is, how can I make fast money? How can I make returns the fastest, right? I think there is no shortcut to success, right? Everything is a process-driven way. So I think giving them that counseling, that financial education, and making them aware that, this is where you need to go, this is where you are, and these are the ups and downs that you will see in the interim. And I think that journey explaining, they well understand and then move forward. Yeah.
Right, right. So, Vishal, at a time when the churn rate is higher, I mean, Gen Z or this new generation will look at a theme, invest, it's not performing, move out. So, how can we make them stay longer in the market?
So again, as I said, Abhinav, I guess we have to keep, drilling in their minds all the time in terms of, the same thing in terms of asset allocation, in terms of, a core and satellite kind of an approach where the core becomes, the main reason in terms of why you're investing in the markets. Typically, most of us will invest only because of 2 or 3 main reasons. One is to beat inflation. One is to, benefit from the India growth story. And that kind of investing in a diversified, fund, passive fund or an active fund is where, that should be the kind of core of the portfolio. And if you want to take risk, that should be in the satellite portion of the portfolio, which could be, depending on your risk-taking appetite, it could be a 80-20 mix, it could be a 70-30 mix, it could be a 60-40 mix, depending on how much risk you want to take. And that's something that, we need to keep drilling in and ensure that, we keep talking about, as Dilshad said and Sandeep said, that keep talking to them, keep showing data to them, keep, making them understand in terms of how do you calculate returns, how do you calculate risk, what are the upsides and downsides of the market. And it's just a constant education that, all of us need to do in the industry.
Right. But Sandeep, do you think this message of boring investment, I mean, asset allocation, don't chase returns, does this message resonate with the Gen Z investor, or we need do you think we need a new communication method to reach out to them?
Look, I think we need to recognize that investing is exciting, right? Now, how do you ensure that that does not translate into too frequent actions is the problem to solve. And that's how we deal with it, right? For us, we manage money for most of our clients on a discretionary basis. So actually, it's actually doubly harder because we're asking them to leave it with us and then we'll handle it, right? Therefore, what we have tried to do is with these folks, be actively talking to them about how we are thinking about the markets, what are the actions we are planning to take, what are the reasons why we are not taking actions at a certain point of time, right? Once that engagement is established, the pressure to act on their side is significantly lower. And over time, then we've realized that it's all about communication. Most of the time, somebody wants to react or act when they are nervous or they are excited about something, and they don't have a outlet for that emotion, right? If in the conversations we are able to discuss it, we are able to engage with their energy and excitement, it does not translate into portfolios. In fact, I actually feel that when we look at the portfolios of younger clients, are they more impatient than potentially older clients? The answer is no. One of the clients I was talking to recently, he runs a small business out of Bhilai, and something around a steel business. And he was telling me that paisa paise se banta hai, so I want to leave the money with you. I don't want to spend it, right? Now, that's such a fascinating thing coming from young folks. I think the industry, mutual fund industry also has done a fantastic job of educating that. I think the grounding is solid. We just need to engage in a way that they don't react too often.
Right. Now, we are running out of time, but I have one round of questions to go. Dilshad, you are mother to 2 Gen Z kids. So what has been your experience like? And I mean, what do you teach them and what they teach you?
I think they're fed up of listening to me passively speaking to.
Do they invest on their own?
Yeah. So very much. So
have they beaten your returns?
Sorry?
Have they managed to beat your returns?
Well, they've not been allowed to invest in crypto. So, yeah, but I think the good thing is they've grown up listening passively to the importance of saving, investing, long-term growth, wealth creation. In fact, a funny story is when one of my cousins was down from Mumbai, my son started explaining to her the SIP and compounding and STP, and he spoke and answered all her questions. And then finally, when she came to a difficult, he just looked at me and said, okay, now what are you going to say? I mean, they've heard it in and out in their thing. And I think the discipline of starting early. So even my older son, who's 21, he today has actually built 2 lakhs with no earnings. He's just starting his career today. Younger one is too young to, of course he's 16, but still too young to understand the importance of money and saving and investing. But I think that is, half the work done when, they have actually realized that money doesn't grow on trees. You need to work hard for it. You need to save. You need to invest. And we did that right from the beginning, right? We used to give them small amounts of money if they did chores well, etc. So I think that value comes from the parenting and the upbringing at home as well. Right.
I remember during COVID times, Mr. Kalpain is in the crowd. He shared some lovely videos with his kid explaining global companies and talking to his kid. Any advice that you would like to give to parents who have 13, 15, 18 years old at their home, how they can introduce financial lessons, money lessons to them?
Well, just recently there was somebody in the industry who said that what we do is we try and ask the children to come if they're about 15 to 18 with their parents during our gold review discussions. Because that's when they're actually finalizing their education, their undergrad or postgrad requirements. And we want the children to realize how much the parents are saving towards these goals and that it's not kind of simple or easy to work up such large numbers. We also at that time try and finalize universities, costing, solutions of which area they want to go into. So it becomes a very nice family discussion, and sometimes a very heated one too, where I just step out and then they discuss and then I come back again. And so I think bringing children into these conversations at an early age would definitely help. And giving them, making them understand the value of money at a young age, making them realize that, you're not born with a silver spoon. I think these are some of the parenting habits, I did. I don't know if they're working or not.
Right. Now, Ashish, between people and apps, where does the future of investing lies? Or this answer is somewhere in between?
I think definitely something in between. I want to address one point before I answer this, is that I think we are talking about different set of Gen Zs when we are talking to this panel, right? One set of Gen Zs is who has money, who can hire financial advisors, and they're smart. The other set of Gen Zs which I deal with, I have 2 crore plus users registered on the app. I don't have the luxury to call every one of them and explain them what is investing. And that is where there is the other world who doesn't have enough money to hire a financial advisors, which we are solving for. And I think there are different problems set to solve for both. Probably we'll discuss it separately, but I just wanted to say that out loud, that there are 2 set of Gen Zs that exist in the world. Sorry, your question was between people and AI. I believe in the next 5 years, you will see a lot of AI-assisted investing, not AI-automated investing. So you would see a lot of people get access to information right on the apps who have smaller money and still want to make good returns in their investment, would see a lot of assistance through AI, and apps would actually help them do things better, faster. And today, the biggest problem in the industry is that users don't learn from their mistakes. They make a mistake, they forget about it and move on. And they repeat that mistake multiple number of times because they don't have an advisor who can guide them in the right direction. And that is what even we are trying to solve, is can you learn from your bad decisions, and we can remind you at each investment that this is the bad decision that you made. Are you getting into that trap again, or can you do better? Right? So I think a lot of mixed approach of AI with powered with the human intelligence is what we're going to see in the next few years to come.
Right. One question on mutual funds, Vishal. There are a lot of themes, there are fancy themes that have come up, defense, EV and all. Do you think there are enough guardrails within the industry to safeguard young investors?
As I said, the industry is doing its bit to, to educate, investors who are investing in these themes. But you have to understand one thing, that at the end of the day, these products are being launched to, to allow investors to take differentiated kind of exposures. And typically you'll find that a lot of these exposures are being taken by more evolved investors than I would say, others. We have to keep, talking about and giving the right kind of message all the time. Keep training them in terms of how to build portfolios, and to ensure that, that they're not got too much of risk piled on, in their portfolios. And I think that job of Amphi and the industry is continuous, whether it's Gen Z or whether it's, so many new investors who are going to come into the market in the next couple of years. So it's a continuous effort that, we have to do.
Right. Sandeep, quickly, with the recent correction, do you think this young generation investors are reconsidering their FIRE goals?
In fact, every time the market corrects, the question that we get is how much more can we put in right now, right? So I think because they've seen up moves, they feel that this is an opportunity to get in. And sure, I think depending on everyone's own financial situation, I think that's it. I think, frankly, look, most of them are in it for the long term, at least the clients that we deal with, right? They are not panicking. They are staying invested. They are asking all the right questions, that am I in the right portfolio mix? Should I increase some fixed income allocation? Their awareness towards bonds, and there are a lot of bond platforms which have done a great job of educating investors about fixed income options. So there is that awareness. The concept of asset allocation, a lot of them are actually familiar with. So I think I am actually very positively surprised by the amount of knowledge and information that they have in the client cohort that we deal with. I don't think they are reacting to near-term situations.
Fair enough. We are out of time, I think.
I just have one thing
Sure.
to say. I think the youngsters today, some of them who are working for these big tech companies, actually get a lot of money very fast. I think it's important for them to kind of, realize what is asset allocation and what should be their kind of strategy for. Sometimes when you're flushed with a lot of money so fast, you need advice, you need an advisor to give it. So this even answers Malakshi's question when she said, how does 50 fund houses and 1,700 schemes and so many, reach? I think the awareness building by advisors like us, there are only 900 RIAs, there are 2 lakh MFDs, and there are these platforms. There is a need for one-to-one discussion and customer. So he said, I think a combination of both tech as well as advisory is what ultimately would lead to.
One last rejoinder there. Whenever somebody has 10 lakh rupees and you want to anticipate what kind of questions that you will get from them as a wealth manager, put that down in ChatGPT. Ask ChatGPT, I have 10 lakh rupees, what should I do? It'll tell you asset allocation, it'll tell you diversification. And those are the questions. That's the starting point for most of these younger folks.
Right. So I think we are at the end of the session. Thank you all for the lively discussion.
Thanks a lot.